America loves life insurance. Germany, not so much. In fact, Americans buy life insurance at nearly twice the rate of Germans. And when they buy it, they often spend more, trust it more, and use it as a core part of their financial planning. Meanwhile, in Germany, life insurance is something people often avoid, distrust, or treat with extreme caution. So the question is, why? Why do Americans embrace life insurance while so many Europeans, especially Germans, are skeptical or uninterested? Today, we're going deep into cultural psychology, history, economics, and mindset to understand one of the most fascinating financial divides in the world. Let's start with the United States. In America, life insurance is marketed as freedom, protection, legacy, and even a strategy for building wealth. It's woven into the culture of self-reliance. Americans are taught from a young age that you have to protect your family because no one else will do it for you. Social safety nets in the United States are limited, pensions are disappearing, healthcare is expensive, and retirement is largely a personal responsibility. Life insurance becomes a tool to replace income, build tax-free savings, and leave money behind for your children. For many Americans, insurance isn't about fear. It's about empowerment. It's about preparing for life, not just death. Now, let's look at Germany. Germans are among the most financially cautious people in the world. But they have something Americans don't: trust in the state. Germany has strong social systems, government pensions, universal healthcare, paid parental support, and welfare programs that go far beyond anything Americans have ever experienced. Because the state provides so much support, Germans aren't as obsessed with financial survival. They don't live with the same fear that a single medical bill or job loss will destroy their lives. That changes how they think about insurance completely. In America, people buy insurance because they feel like they have no safety net. In Germany, the safety net already exists. And because of that, insurance is often seen as unnecessary, redundant, or even exploitative. There's also a cultural difference in how risk is viewed. Americans grow up with the idea that risk is opportunity. You take chances, you invest, you bet on yourself. And if something goes wrong, insurance can protect you. In Germany, the mindset is the opposite. The goal is stability, security, and avoiding risk altogether. Germans don't like paying for things that may never be used. They prefer guaranteed outcomes, regulated products, and mathematical fairness. They want certainty, not hypotheticals. A policy that says maybe you will get this money if you die often feels like a bad deal. Another key factor is history. In the United States, the life insurance industry grew alongside capitalism and private wealth. In Germany, financial products were shaped by war, inflation, and economic trauma. Twice in modern history, Germans saw their money become worthless, first after World War I. Then during hyperinflation in the 1920s, and again after World War II. That created a long-lasting distrust in financial institutions, especially insurance companies and long-term contracts. Germans learned to rely on cash, savings, and state guarantees, not private financial products. Now let's talk about marketing. In America, life insurance is sold aggressively, emotionally, and everywhere. Agents recruit constantly. Companies run commercials, and influencers promote life insurance as a wealth-building tool. You'll hear lines like "protect your family," "build tax-free retirement income," and "be your own bank." In Germany, that kind of emotional marketing would be considered manipulative and unethical. Insurance is sold with documentation, regulation, and a heavy focus on facts, which ironically makes it less appealing to the average person. There is also a major difference in what people want from financial products. Americans like flexibility and potential upside. Germans want guarantees. Many Germans prefer savings accounts and government-backed products over anything that involves commissions, surrender charges, or corporate risk. Whole life insurance and cash value policies are extremely popular in the U.S. because they offer long-term growth and tax advantages. In Germany, those same policies are often criticized as inefficient, expensive, and too dependent on corporate performance. Even term insurance is viewed with skepticism because people would rather save the money themselves. Another major difference is how people view death. Americans talk openly about death, legacy, protection, and inheritance. Life insurance even appears in movies, TV shows, and celebrity wealth strategies. Germans, like many Europeans, don't like to think about death in financial terms. It feels cold, transactional, and emotionally uncomfortable. Many simply avoid the topic entirely. But here's where things get interesting. Trends are starting to shift. Europe's population is aging fast. Government pensions are under pressure, and younger generations are losing trust in social systems. Germany, like Japan, is entering a demographic crisis. As people live longer and have fewer children, private savings and life insurance are becoming more necessary. Younger Germans are beginning to buy policies not because they love insurance, but because they don't trust the future. Meanwhile, Americans are becoming skeptical of insurance companies too, especially after scandals and rising premiums. The gap between the two countries is shrinking, but their core mindset differences remain. So why don't Europeans trust insurance like Americans do? Because Americans see insurance as personal empowerment, and Europeans see it as corporate profit. Americans want to build a legacy. Europeans want to avoid losing money. Americans are raised to believe in individual responsibility. Europeans are raised to believe in collective protection. The systems around them shape their psychology, and their psychology shapes their financial decisions. In the end, neither system is perfect. Americans spend thousands on insurance they may never use. Germans face the risk of being unprepared if the state fails. The real challenge is balance, and understanding that culture, not just money, determines how we plan for the future. This is Global Wealth Lens, and if you enjoy understanding how different cultures view money, life, and security, make sure to subscribe. Because finance is not just about numbers, it's about identity values, and the stories we tell ourselves to feel safe in an uncertain world.